So guys, as I was just mentioning, tonight I'm going to go through how to use TradingView. Now all TradingView is, it's a site that you you can open an account with. You can have just a free account, or you can have an upgraded account for extra features and all of that sort of stuff. But a free account's generally good enough for most people. And any real serious trader will be using TradingView, simply because you can open up a chart on any pair you like, all the Forex currency pairs, all the commodities indexes, cryptocurrencies. If there's something you can trade on out there in the wide world, then you can access it from TradingView. You don't actually place trades on TradingView, although some brokers do have a, what would it be called, a sort of a bridge, a connection between TradingView and their site as well. So you really do place trades on TradingView, but it's not TradingView itself that you'd be placing them with. But, okay, I might just go through, like, a few people were asking for a bit of a lesson just on how to use TradingView, because most of the lessons, the little Zoom calls that we've been recording, I do use TradingView, but apparently, you know, they weren't quite sure what I was clicking on to make it do this and do that. So we'll go through all that tonight. So just to go through what we were talking about so far, we went through resistance and support. And say support, this one's support just because the market keeps bouncing on exactly where that line is. And that resistance isn't very strong because it's only just touched there once. But if we change the time frame, which we do, just by clicking up here where it says 1 hour, clicking on there, and then we can select all of these different time frames. So if we put it on the daily one, we'll find that this resistance line is there because it's touched here and it's touched here as well. And if you go back further, it may have done again. So that's how we change the time frame. I'll put it back onto 1 hourly for now. So if as I'm chatting away here, guys, something doesn't make sense, or you have a particular question in regards to TradingView or how you could do something on it, just speak up. I mean, TradingView's got so many different features. So that's just a drop down from that one there. So you got all of those different ones. And each of these has a drop down on it, which with different stuff on it. So there's a hell of a lot there. There's a hell of a lot that I don't use. There's a hell of a lot that most people don't use. And there's even a hell of a lot more that we won't get through tonight, but we'll touch on the main ones there. All right, well, let's just go through what we've done so far. If we decided we wanted to draw a resistance line, I'll just get rid of that one. If we wanted to draw a resistance line, we'd need to come over here to this line, this symbol. This symbol may be different depending on what you've used last, but it will be the top one, or the second from the top. And if you open up that menu, you'll come down and you'll find all the different lines that you can draw. So for now, we're going to draw a horizontal line. And we're just going to, you can see how it's highlighted. It's in the blue color now. We can just come across, and if I decide I want it right there, we'll click it and we'll place that line right there. If we wanted to draw another line, we just have to click on that again to highlight it in blue, and then we can draw another line wherever we wanted to. If we wanted to, like that line I deleted before had resistance written on it on the side, to do that, we just need to come to the center of the line so we get that big dot showing up. We double click on that and it opens up the menu, and you can just type in whatever you want. And now it says resistance. other things that you can do from this little extra menu. So at the moment, resistance is written on top of the line. You can set it to put it on the bottom of the line or the middle, which I don't know why you'd want to do it like that because you can't read it, but you can do it. And you can also change it from the right-hand side of the line to the, oops, to the left-hand side. So it's over the other side now. Or you can put it in the middle as well, whatever. And you know, you can change the color of it. You can change the size of the writing. You can highlight it, all the normal sort of editing tools that you get with most stuff. That's the main stuff you need to know about. The only problem with the free version of TradingView is you get ads, and some of them are telling you to upgrade. So with the free version, you have limited access to tools, which is still a big. There's a lot of different indicators you can access for free. You can still set alarms and everything, which we'll get into in a minute. But if you have the paid version, you don't get the ads, and you do get access to a few more features as well. I'll touch on what they are just so you know. But okie doke, so this is our trend line I drew here. I'll delete that. If we want to draw a trend line like that one, it's the same menu and the drawing features, you know, and we're just going to do a trend line now. And so it's highlighted now. So if I come down here, with everything on TradingView, when you're doing some drawings, you put the cursor where you want the line to start and you click on your mouse, and then you let go of the mouse, and then you move the cursor up to where you want the other end of the line, and you click again. You don't double click and drag. You just click once, let go, and click on the other end as well. So that's our trend line. And the same thing, you can draw text on that box and everything as well, same as a normal line. Now, if we have a look at the trend line, I've got a yellow star on it. The horizontal line, I've got a yellow star on it. What the yellow star does is just make it a favorite, and then it also shows up here on my favorites bar. You can just move that favorites bar wherever you like it as well. So these are all the tools that I mostly use. So this box here, I use this for drawing support zones mostly. So that's our resistance line. But if I decided that I wanted to make it a zone, I quite often just do that. Down here, this text, and so that obviously that shaded drawing I just did, you'll find that on the fourth one down. And so you've got a brush and highlighter, so you can just draw freehand or draw a line. You can do a rectangle like what I just did. You can draw circles, triangles, or weird shapes, anything you want. So that's where you find all of those ones. And like everything else, if you double click on it, you can change all the settings on it as well. Oops, that's the chart settings. But this one here, you can put text in it as well, all the same settings as the other one. And I got that just by putting my cursor there where that square dot is and double clicking. That brings that up. This one here I use a bit, particularly when I'm trying to show people if I've done some technical analysis on a chart and I want to sort of share that chart with people so that they know what I'm talking about. I'll quite often use this call out one, and I might just put it there and do that because I want to tell them what I'm looking at there. And in this box, I might just say it's a bearish engulfing candle. I'm labeling one specific thing, I would do it like that. And those call out boxes are in the 5th one down. I've just highlighted a couple of them, but you can, all different ones, little balloons, they're all pretty much the same sort of thing, but you can draw arrows and everything as well. You can go through and have a play with them. And then we get into the more technical stuff, like these ones here. Maybe I'll go with this one. They're both the same, just opposite to each other. If I were thinking about placing a trade here where the market is now, I could put that in there. And if I was doing that, I would be wanting to put the stop loss just above this most recent high point. So I'd put the top of the red part of the box just there. And I might decide I want to take profit, down here near this yellow line, let's say. So I'd put all that down there. And this is telling me my risk to reward ratio, which is 2.28. So for every dollar I risk, I'm potentially going to make $2.28. So if I've got my stop loss here, I would lose, let's say, 1% of my account. That's what I usually do a trade on. And if I hit that stop loss, I would lose 1%. Because the risk to reward ratio is 2.28, and I have my take profit line down here, that would give me 2.28% if I hit my take profit. And what we like to look for in a trade is one, there are different types of trading strategies, but what we mostly look for is a setup like this, where we are potentially going to make more than we could potentially lose, which I know obviously sounds like a good thing. And in this case, we make 2.28 times as much as what the loss would be. And all of these ones are in the, what are you up to? 3, 4, 5, 6, the 7th one down. And of course, there's a whole heap of different things as well. Most of them I just don't use, simple as that. So I'm only going to go through the main ones, so I won't even mention what they all are, because actually most of the ones on that screen there now I've actually never used myself, so I probably couldn't tell you exactly what they are. Another very, very handy feature on TradingView is a little ruler here. I'm going to use the ruler, and strangely enough, it's good for measuring. So I might want to have a look at this chart. Actually, I might use a different chart. Let's go with pound yen, because I use the ruler more in my Forex trading. So I might have a look and I might go, gee whiz, look how far that dropped. I wonder how many pips that is. And I would do that with the ruler. I just click at the top, bring it down to the bottom and click. And click. Thank you. So now what it's telling me is that from the top of my line down to the bottom is 166 pips. Now, if you haven't done too much trading yet, a pip might be confusing, and we might definitely have a lesson on pips actually, because that's a common question that people really don't understand what a pip is. They're always trying to relate a pip to a dollar value and all of that. It doesn't have an exact dollar value. Until we actually do that lesson, I think the best way of thinking of a pip is it's just a measurement of distance on the chart. Obviously, depending on the size of your trade and what currency pair you're on, the number of pips could also have a relevant, profit dollar value. But a pip itself is really only a measurement of distance. Let me draw a better ruler one. So let's draw from the top, but we'll also go across and down as well to a similar place. So now it's also telling me that from where I started the shaded area across to the other side here, it's 34 bars or 35 candles. And so depending on how what time frame you're on, that will be a different measurement of time. So in this case, 35 candles is equivalent to 1 day and 11 hours. So 24 hours for 1 day and another 11 hours. So it would be 35 hours, which that's quite good as well. One way that I would use that bit of information is I might get my ruler and measure from the top to the very bottom of the market, which was there. And I can see that it's taken 17 hours for the market to drop that far.
What does this mean?
And I like to use that information to sort of try and, it's really a guess because there's no exact measurement here, but try and work out how long it may take to get back up to where it came from. And so I would just say, you know, it could be 17 hours. It could be twice as long or half as long as well, of course, but the market tends to move in cycles, and really what trading is all about is looking for different patterns. But, you know, so like in here, I would measure it, and this one's like a perfect V. So it took like 7 or 8 candles down and another 8 or 9 candles up. So it's pretty similar. And if the market's been doing dips and peaks that are quite symmetrical like that, you can sort of expect that they may very well do it again. But that's all the info that the ruler shows us. That's another one that we always use a lot of. And then we can get even more technical. Let me just find these ones. These ones here. I've got them all on my little hotbar up there, so I forget where to find them.
How did you get your hotbar, Liz?
Yeah, you just come to here, open up the menu and highlight the star. So if I wanted this one there, I highlight it and it would add it in. But the hotbar will just always be there. If you don't have anything on it, you might not be able to see it there. So the pitchfork one, or the third one down. You know, these are all the really technical ones. I don't think too many of them get used too much, but one that does get used a lot is the fib retracement tool. And we will do a lesson on Fibonacci retracements. But how we use this one is we click at the top of the market and we measure down to the bottom. And now the little lines of information here. So if you can imagine from the top to the bottom, back to this first line, that's a 23% retracement. So that's this distance here is 23% of that whole distance that's dropped down. So back to 23%, this one 38%, 50, 61.8, et cetera, right back to 100% retracement. So there's a standard sort of line of thought for Fibonacci, and that's that the most common retracement's at 38%. The next common is 50, and then 61%. If this market retraces further than 61%, you start to think that maybe it's not just a retracement, but it's, let me try and explain that better. So at the moment, the market's going down. It's in a downtrend, but the market never just goes straight down. It comes down to here, does a retracement, comes down to here, does a retracement, and keeps working down. So we all know the market zigzags down and zigzags up. The most common zig is to 38%, and then it zags back down. Next most common is 50, and then 61. If it actually retraces further than 61, you could be starting to think that the market isn't going to zag and continue down. That is actually, it could, there's no guarantee yet, but it could be going to change direction and start working its way up again. So we can use that if the market's coming down and if the market's been trending down and we've been looking at doing short orders to make money as the market goes down, we might realize that the market's retracing, and we might use the Fibonacci tool just to see how far it's retracing. You know, if it's getting near this 50, we'll be looking to see if the candles are going to indicate that it's going to start going down again. If it gets to 61, we're still looking for those candles to indicate the direction. If it goes further, we might have to double think our thoughts on whether the market's going to continue to go down or not. Another way that I like to use Fibonacci myself is I'll look back historically. This isn't a very good downtrend one, but I'd come down here and I'd see how far. Let's say the market was just zigging and zagging all the way down. I would measure from the top here to the bottom, and then I'd have a look and I can see that it's retraced to 50% this time. And then I'd measure the next one down. If we're looking at a big downtrend, you'll find that they're fairly symmetrical. Quite often it'll be a 50% retracement and then it'll drop further down. Then you get another little 50% retracement and then it'll drop down, and another 50% retracement and it drops down. If the next one goes to 70%, start to be cautious because the downtrend may be coming to an end. But just getting off the subject a bit, Fibonacci is another whole lesson itself. Clear my screen a little. What you will also see that I have set up here is over here I have a watch list. I have way too many on here, but the whole idea of the watch list is what it sounds like, I guess. But this is just all your favorite pairs and trading pairs that you're doing. So you stick them all in there. Otherwise, you can just click over here where it says pound yen. If you click there, you can just do a search for whatever you want. So let's say we might want to do NEO USDT pair. And then it's going to show us, we've got the NEO Tetherus pair on Binance, KuCoin, Bittrex, Huobi, OKEX, etc. So these are all different cryptocurrency exchanges. And you will find that the market will move slightly differently on Binance than it does on KuCoin, because this is just solely related to Binance. And the Binance is a much bigger exchange than KuCoin. So there are a lot more people trading on Binance. So the market can move differently than it does on KuCoin, although the values will never be greatly different. Sometimes just momentarily, they can be quite a bit different. And that's where people do triage trading. But yeah, just be aware if you're on Binance, if you're trading on Binance, it's best to be using TradingView on the Binance option, not KuCoin. Otherwise, it can be slightly different. With the Forex pairs, go back to where we were. There are also a whole heap of different options. That's FXCM broker, Oanda broker. They're all just different brokers. But they will mostly always be exactly the same, except for, so I mean the value of the pound yen will always be the same, but from one broker to the next, there can be a difference in the spread. So a difference between the ask and the bid price, which can still make a slight difference. So not as pronounced on the Forex pairs as the cryptocurrency, but it's still best if you're using the FXCM broker to use, to select this option here. I quite often use Pepperstone, which isn't an option here, so too bad, too sad. I'll just use FXCM most likely. But to add pairs to the watch list, you just click on, let's make sure nobody's faces are in the way. You just click on that plus to the right of the watch list, and then you just type in whichever one you want, and then you just come down and you click on it, and it will add it to the bottom of your list. Any questions on any of that so far, guys?
Can you make it go in alphabetical order, Les?
Don't know, can you?
I don't know.
Don't know. How's that?
Yeah, fair enough. Now, I'd like to, it saves searching all through it. If it was alphabetical, it'd be easier to find them.
Yeah, I think you're probably like me. You've got way too many in it. But whenever you add one to the list, it'll always get added to the bottom. I know that much. You should just be happy you've got a watch list, Rod. I remember that wasn't an easy task.
Yeah, right. I had a battle to find it in the first place.
I know. All right. So the watch list is this symbol up the top on the right-hand side. The next symbol down are alerts. So if you click on alerts, it's telling me I don't have any alerts, but I might want to create one. Why would you want to create an alert? Well, let's say I've had a look at this and I've decided if the market comes right back up to where it was here, I want to jump in and do some trading. But until it gets up there, you know, I'm not really interested. That's something you'll see and do quite often with trading. You'll have a look at what the market's been doing, and you'll know that if the market gets up to here again, not necessarily, but you know, if the market gets to a certain position, then you know there's a potentially good trade about to occur. But instead of sitting here and staring at the screen for a number of hours or days until the market does get there, we can just create a little alert, and we'll place it where we want to. And when it goes off, you know, you can set it to, you know, you can get an email just to pop up on your computer, or you can have it sent through to an app on your phone, just so you get an alarm, and then you can jump back on here and have a look and hopefully take out a good trade. So what we're looking at is the pound yen. When it crosses this line, you can have it so only when it crosses up, or when it crosses down, or just any crossings. So there's a whole heap of different options. I have it just on crossing, and I don't want it only once. I want it to do it every time it crosses it. And I also like to, you can set the time and date as well. I usually, just to make it easy, so today's not the 7th. What's today?
Yeah, it's the 7th.
No, it's oh yeah, it is the 7th.
Yeah, it's all right.
Yeah.
I'm on the wrong month, so it's the
Yeah.
7th. You know, so I'll just set it, not for today. I'll just set it for a couple of days in the future, so that every time it crosses that line, it's going to get ping, 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 ping. The reason I do that myself is that maybe when it crosses it and an alert comes out, I might just miss it. But if it's sort of bouncing around on it and it goes off a few times, there's a better chance that I won't miss it. You can set it open-ended as well, but if you have the free version of TradingView, it tells you need to upgrade to do that. One of the actual real benefits of having an upgraded TradingView account is you can set multiple alerts, which is very handy because you might have done an analysis on 10 different pairs, and you might want to set 10 different alarms, one for each pair, just to let you know when the market gets to the right position. On the free version, it only lets you set one alert at a time. But in this case, the alarm's going to go off at 153.046, so that's 153.046 about here somewhere. But we want it to go off at 154. So we'll just change that. And we'll click create. And now we've got an alarm up here. If the market crosses it, we'll start getting notifications, emails, and alarms, and we should know all about it. But yeah, so that is one of the big advantages of having the upgraded version, is you can set multiple alerts. Any questions so far, guys?
So when you talk about the app on it would be an app on your mobile phone or your iPad or something like that, would it, Les?
Yeah, so you can have TradingView on your phone as well. It's just an app as well.
Okay.
And then, you know, as long as you've got notifications turned on your phone, it'll just send a notification to your phone as well. So I've got it on my phone as well, and they just sync together. So even when I've been on my PC like I am now, and I draw up my support and resistance and my lines, and I do all this technical stuff, then if I go out away from home and I open up TradingView on my phone, that technical analysis, all those drawings that I've done will also be on my phone. Although it doesn't tend to sync instantly, although that's probably a setting you can change as well, which is very handy, I find. All right, so there's probably not too much more I want to go through here tonight, but I will go through this. You can change with the candles. There's a whole heap of different types of candles you can have. Some of them like just a line. Yeah, it just draws a line like that. Some people apparently find that handy because it's not so much up and down movement, sort of averages it out. For me, I'm so used to using candles that doesn't look good to me at all. There's a whole heap of different types of candles, but they're not ones that I'm going to be teaching myself because I just use normal candles. But yeah, you'll see these Heiken Ashi, I don't even know how to say it, but you'll see people in other trading circles referring to using those as well, or areas, etc. But I just use these. And you can obviously change the colors as well, just on your chart. If you just click, you can go through there and add alerts, lines, color seed. If you go in through all that, you'll find where you can change the colors of anything on your screen. You'll see some people will have a black background on their trading view. That's just a setting as well. And this one here that says FX, this is all your different indicators that you can have. And then we'll go into indicators on another lesson, but just so we know what we're doing with TradingView, we just come down here and you can just type in what sort of indicator you may be looking for. Let's say you wanted a moving average one. You can just click on that. And what that's done is it's drawn this blue line, which is a moving average. We won't get into exactly what the moving average is in this lesson, but if you put your cursor right on it and you double click on it, you can change it. You can change the colors, you can change the inputs. Input's going to be a bit hard to explain what the inputs are without getting into what the moving average is, but the moving average is what it sounds like. It's showing you the average over a certain amount of period. So the period can be changed here on the length. You can have it whenever the candle closes, it's using that value, or whenever it's high, or the average, etc., etc. And the style, oh, that's different to what I'm used to looking at. But yeah, you can go through all the different ones there, and the settings. There's obviously settings for pretty much everything you can think of. And as I said, if you've searched up what you're looking for, moving average, you can come down here and you can just highlight the little star again to make it a favorite. And then we've got them saved just here so we won't have to search next time. Relative strength index is one that a lot of people do use. It gives you this little graph down the bottom. But we will do a whole lesson on the moving average because there are some really nifty strategies that you can use the moving average for.
There's one they use on variable called the meanness one, and I think it's quite good because it sort of tells you whether the market is going up, going down. I think it's the meanness one, going up, going down, or it's flat lining.
Yeah, there's literally thousands of different indicators. If your indicator's in a window separate like this, you can also just put your cursor in the middle, make that box bigger or smaller. One more thing I just thought of to go through for the moment is I've got too many lines on this one, haven't I? Let me find a better one. Alrighty. So that's just another Ethereum chart without so much drawing on it. There are a whole heap of, and this will be another lesson too, but there are a whole heap of different patterns. Elliott waves, head and shoulders, and all of the others as well. But you can just access them through the third, fourth, fifth, sixth one down. And like with the head and shoulders one, you just select it and you can just use it to draw. Just put a dot wherever you want it to be. So the head and shoulders one is just really showing that the market's in a, you know, you got a shoulder, you got a head's higher than the shoulders, then you got another shoulder. This is a pretty messy looking one, but all it's really showing is that the market's been trending up to the top of the head, and then it starts to trend downwards. So it's just a reversal pattern. So if you get a head and shoulders pattern, it means it's reversed. So the market's trending up, it reverses, it's trending down. No, not really much different to the market structure that we went through last week. You know, we've got higher high, higher high, higher high, and all of a sudden we've got a lower high. It just shows that the market's changed. So I guess head and shoulders, it's not really a lesson, but we'll go through some of these different, there's probably two lessons coming up next week and the week after. One will be continuation patterns. So certain patterns in the market that indicate that the market will continue to go in that direction. And then we've got reversal patterns like this one, which indicates that the uptrend reverses and becomes a downtrend, or vice versa. I guess lessons on Forex could just go on and on and on. There's always something new and extra. But I reckon even just the lessons we've done so far would be enough to point you in the right direction. And if you could study just those particular ones and come to grips with all of them, you could definitely be a profitable trader. But also, like what I've said in all the other little lessons that I've done, is that, you know, on support and resistance, that's not a huge lesson. So we did cover a fair bit of that, but there's still a lot more and a lot of other ways that you can use support and resistance. So you need to go off and have a bit more of an in-depth learning on support and resistance as well before you have a full understanding of it. And the same with the candles. Like, there are a hell of a lot of different candle patterns that can indicate various things. We just touched on a handful of them. So there is a whole heap more that you could learn about candles. So you definitely need to go off and learn more about them. Hopefully my lesson on candles was enough to open your eyes to the fact that each candle and each group of candles does definitely tell a story. And so, you know, if you know that, then you can hopefully understand that going and learning more about that is definitely worthwhile. And, you know, then we went on to trend lines and market structure, same thing. Hell of a lot more to learn on it. Hopefully I just open your eyes to the fact that it is something that can help. You can obviously go off and Google stuff. You can go and pay for courses. I've even got some PDF books as well that if people want to have a bit of a look through, I'm happy just to shoot them through to you. You know, just a free book to have a bit of a look at. Just don't tell anyone because I didn't pay for them either. Oh no, I recorded that. That's all good. Okay, guys, if there's no questions, I'm going to turn off the recording and we can have a quick chat about something else if you want. All
You just
good?
need to cut that bit out, Les.
Sorry?
You need to cut that bit out of your recording.
Yeah, that's all right. I'm only going to show friends. I'm not going to. If they want to whinge about that, they're not getting any more of my lessons.
No.